Hey everybody, Boris with BK Forex. Welcome to the Calm Dollar section of the BK Weekly Technicals for August 28th to September 1, 2017 for Aussie dollar, dollar CAD, and Kiwi dollar. And the story in the Calm Dollars, of course, has been the same as it's been for the last couple of months, really. Very, very low volatility trade, extraordinarily low in the Aussie and the Kiwi, but the dollar CAD story continues to be the sort of the shining light. And this week, we really have kind of like two interesting stories. We, of course, have the dollar story and the Fed, the non-farm payrolls, the yield story, the euro story with the ECB. But the secondary story that's coming out of the U.S. that is going to have, I think, a bigger impact on the calm dollar trade is the whole Hurricane Harvey story. Now, Hurricane Harvey hit the Gulf Coast of the U.S. and produced massive amount of rainfall. This rainfall is, as far as I can see right now, swamping the Houston and Louisiana area. The story there that's fascinating is that 45% of all U.S. refining capacity, and more importantly, also the import-export from the ports, is affected in that area. And if that area is so flooded and so completely out of service for week or two, or perhaps even 3 weeks, it creates a massive backlog, creates huge pressure on oil prices, and could provide further impetus for dollar CAD's weakness or CAD strength. CAD has been strong outside of the strength in the oil numbers, and the oil going above $50 a barrel could be the one catalyst that could really push us to fresh multi-month lows. So we're going to look at those charts as I think the most interesting story in the calm dollar land as we go forward, because Harvey probably will be as big, or maybe even a bigger story in many ways this week than anything else on the economic calendar. Now, let's take a look at the calendar first, then we'll take a look at the levels. The calendar on the calm dollar land is very, very quiet. We literally have nothing except, I believe, Canadian data. We have current account balance, Canadian GDP coming in on Wednesday, Thursday. We're a little bit bearish to Canadian GDP because weaker retail sales and the trade balance numbers. But it really hasn't had much of an impact on trade, even as we go forward, unless it's a really super negative number. Hard to believe that's going to be a big impact on the loonie. The more interesting trade, of course, is going to be on Friday, depending on how the U.S. numbers print, because if we have a strong U.S. print, should actually be positive dollar CAD. Aside from that, literally got nothing. It's just a smattering of very small Canadian data. Australia and New Zealand are really off the map this week, and very likely to stay very quiet. They're really going to be primarily with the Aussie and the Kiwi, the carry trade flow story. If U.S. yields continue to drift lower, yes, Aussie goes back up to 80. Kiwi has a chance to maybe make a move towards the 74s. But apart from that, if we get any kind of a strengthening in U.S. yields, I see those two currencies as relatively vulnerable as we go forward. So looking at the levels haven't changed much. 80, 78 still the key support points for Aussie dollar, 74, 72 for Kiwi. It's really the dollar CAD as it approaches this 24 level that is the marked trade in all of the calm dollar land. And we're going to be watching that very carefully. So let's take a look at the charts here, and we'll start with the two quiet ones. Look at the Aussie. You can see that on Aussie on the weeklies, still very much trapped in this 80, 78 range. We did hold the 78s quite nicely about a week and a half ago, and technically it still looks relatively bullish, but only a break above 80 and a hold above 80 would suggest that the uptrend is in place, and that's really would be a vote of no confidence on the dollar. That's really what it's all about. It's about the no confidence in the dollar that's really coming in here. On the Kiwi side, not as nearly as strong as the Aussie. It's actually still remains a little bit under pressure here. The weekly candle is negative, and 72 could be a given. So one of the interesting things I think is if we get any kind of dollar strength, we could have the Kiwi break the 72s, and if that does break it, then of course you can see this is former support, former resistance that becomes support. If that support is broken, it opens the way for a move towards the 70s as the carry trade flows kind of seep out of the Kiwi. And then last but not least, of course, here's the relative strength trade here. This is the loonie. Loonie made a very, very tepid recovery back up to the 28s, and now second week in a row. And in fact, the weekly candle is super bullish. It ends on the lows of the week. 28.40 or 24.80 as the close really puts the 24 very much in view here. That's a big support area here. And if you go beyond that, you don't really have support till around the 21s. So very important if we get any kind of momentum here, watching, of course, the oil prices. Oil prices have just been very calm and placid. But if more news starts to filter out and pressure comes on to refining, oil could pop its way back up towards the 49 level, 50 level. That could be the catalyst to move dollar CAD right down through the 24s. Once we get close to 24s, the temptation to run those stops going to be very hard indeed. So big story of the week, I think, still going to be dollar CAD, with the secondary weakness coming in Kiwi dollar and Aussie dollar. Just a very quiet trade as we go into the final week of summer. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.